And right now, folks, we're going to jump over to our man, Tim Ord. You can reach Tim every trading day at his website, ord-oracle.com. And then you can check out, he's got a couple of great webinars, folks, right under the services tab at TFNN. The secret science of market tops, how to identify market tops, and then the 6 secret ratios every trader should know. We cover some of those ratios when we talk to Tim right here. Tim Ord, good afternoon.
Good afternoon. Thanks for having me on again.
My pleasure. So we got a little action today, Tim. Let's get into it.
Yeah. All right. Anyhow, the first chart is the daily SPY, and I kind of tanned the area here, this area right here and this area right here. I tanned with, a tan. The only reason I put that in there is because that's where the ticks and trend reach panic levels, and panic levels only happens at bottom. So we're going into this panic level right now. Earlier in the day, I had the trend around 1.69 with about 200 down tick readings. I don't have the tick readings, but the trend right now is 1.71. So which is what's supposed to happen when you enter into a support area. Once a support area starts to show panic, next time you go into it, it also should show panic. Kind of reinforces the idea that market's not making a top, it's making a bottom here. I did go long yesterday. I kind of should have probably waited, obviously, but we're looking into a low in this vicinity right now. Is it today? Is it tomorrow? It wasn't yesterday. The only reason I went long yesterday because the volume was really light off that previous low. Anyhow,
yes.
But we're in the vicinity here of another bottom. Seasonality actually turns bullish starting yesterday and runs it all the way into the 1st September. So we should have another rally. This is summer again. I thought at one point we might get down to this area here, but I don't think that's going to be the case because there's too much panic in this region right here, which is around the 530, 540, or excuse us, 640, 635 range. So can it get it all the way in the range? Maybe, maybe not, but we're in the vicinity. And let's look at another chart here. This chart last week was actually bearish. I showed it on your program, and it actually kind of just keep pushing up. Matter of fact, over the last, not today, but the last Tuesday be Friday, Monday, this pushed up. This is the SPX tilt ratio. The bottom window is the daily SPX, and normally the SPX tilt ratio leads the SPX. So if the SPX is making higher highs and the SPX tilt ratio also making higher highs, that's usually a bullish omen for the market to head higher. The last time it was really bearish was back at the February highs. The tilt ratio was making lower highs as the SPs were making higher highs. So that kind of was a warning sign that the market was heading down. We don't have that here. This is, it doesn't really pick the exact bottoms. It actually picks out the trend. And so the trend's up still until this ratio starts making lower highs as the SPs make higher highs. In general, this market's going to move higher. So nothing real bearish there. So I'm long. I do think this trade I'm in right now on the SPX, it may be long for maybe 3 weeks at most, but I think we're still going to have a pullback at least once more, if not twice more in October. So I'm still thinking this is still a trading range. So maybe 2, 3, 4% higher. 5, we get lucky, we'll come back down, maybe 3 or 4%, whatever. So I guess you could, in my opinion, we are going to break higher highs. Well, we're doing it. We did do it already, but I think we're going to see much higher highs later in the year. And I think this base building period, again, could last into October. And, if that changes, I'll change with it. But that's how I see it right now. But on a short-term basis here, I think the next couple of weeks is generally up.
Can I ask you when I jump in, just because I find myself wondering, and I agree with a lot of what you're saying, what do you look for if you're so short term, like bullish, right? But on the horizon, you might see the pullback. Is there one particular ratio that and I know they're all important, but you're long, but you're looking for potentially, and then maybe a pullback. How do you manage something like that when you say to yourself, I feel like this isn't going to be a long term trend. We'll get some volatility, and then it'll go back up. What are you watching there on that type of a long? Can I ask of where you start to maybe get out?
Well, for one thing, this is the weakest quarter of the year, and it's very seldom. If you look out throughout the year, if you go back and look, this is the time frame from basically July to October where the market kind of gets funky. Of all the quarters of the year, this is the worst quarter performance-wise. So normally, once you start entering this period, you don't assume that this market's going to just keep going higher. So that's how I kind of view it. Can we,
Sure.
Can we keep going higher? But to me, if I start seeing any weakness like this SPX tilt ratio, where the SP starts making higher highs, I bet what happens is the next rally, this SPX will make higher high. This ratio starts making lower highs, and I think something. This might give a clue too, where this is the VIX. SPX VIX ratio, and this is the VIX, and this is the SPY. This is another one that you'll have to be careful on, as the SP does make higher highs, say into early September or something like this, and this VIX starts going up. That'll be another clue. If that doesn't happen, it may not, but most likely it will. So anyhow, this is the weakest quarter, and that's my previous analysis over the years. It's just I'm always been careful of this quarter. So
sure. I appreciate the insight, definitely.
Yeah, so I'm kind of just being careful here. It's just I'm not going to stay too long. But anyhow, what I really want to cover. So the SPs is up for maybe a couple more weeks, maybe 3. Then CHOP still into October. Here's what I really want to talk about is this is a gold market now. We're going to flip. We got actually 4 charts on it, and I actually get short a little bit too quick. It's kind of hard to pick out tops. Bottoms are more going to bottom. There's panic, and you can usually get within a day or two of a panic low. Top, sometimes you can be a week or two early, and the market can just keep going up. So you got to really kind of watch how you pick your sell signals. And anyhow, this is. Oops, I hear the music.
That's a perfect teaser. We're going to come back. He's got 4 beautiful charts up here, folks. We're talking to our man Tim Ward, and we're going to talk some gold when we get back. And we got gold off $18 right now. Futures trading at $33.59, and we're coming back. We'll be right back, folks. Don't go away. Welcome back, folks. We're talking to our man Tim Ward. Remember, you can reach Tim. He's got a couple great webinars under that services tab. One of those ratios, folks, that we're talking about over there. Yeah, you're talking about the TLT, the SPY, many over there. Check it out, and then reach him at his website, ord-oracle.com. And all right, Tim, let's talk a little gold. We got gold a little lower right now as we speak. Let's get into it.
All right. This is, I think, Robert Pring. He's one of the analysts for I can't remember. He's an old analyst, and he created this inflation deflation ratio thing, and he didn't do a whole lot with it, but it seems to work pretty well. I put an RSI to it. This is a weekly inflation deflation ratio. It goes back to 2015, 2016, and so it's a weekly. We're going to put an RSI in it. And just like anything, it gets stretched too far in one direction, either up or down. That usually snaps back to a middle one. So anyhow, I put chart goes back. It's pretty rare signals. They don't come, it looks like about every couple of years. And we got one right now. Last time we got a signal, which is basically to get a signal. This is a weekly inflation deflation ratio with an RSI above 70. Triggers the sell signal. So those are what the lines are. A line there, line there. And this is, I think, the COVID crash. You got up to over 70, and the market pulled back. This is a weekly XAU, and the bottom window is the GDX. And we got one right now. So it's a pretty rare signal. Last time it happened in 2022. So that's about, 3 years ago. and they're pretty accurate. So it's a little bit intermediate term indicator, but for me, I always like to have at least two indicators give the same signal. So this is one, and so I actually got short here a couple of weeks ago. This was one of the reasons why I did. Here's another one. This is the GDX daily ratio. Kind of the same scenario. This is the daily, and it's RSI readings again. Right now it's 72.78, but it was up around 73.74 a couple of days ago, and it kind of fell back. But this is the RSI for a daily GDX daily ratio. So you get quite a few of them. We actually had a couple minor ones here, but anyhow, this is another sell signal again. So you got a daily and you got a weekly. Two totally different methods, are not related to each other. So let's go on to another one. This is the just a simple chart. This is the monthly XAU gold rate, or monthly, just the monthly XAU, not a ratio. Goes back to I don't know, a long ways. Like looks like about I don't know, 1995 probably, or somewhere. And I marked all the times when the RSI of so it's a momentum indicator of RSI of the monthly XAU. So it's another monthly chart. So you got a weekly, a daily, and a monthly chart giving sell signals here. And if you want to go one further, this is kind of a momentum indicator. This is a full stochastics. Kind of works the same way. So all of it's saying the markets need a rest here. We're running into the highs of 2011. And so I marked that pink area. I think this is the area where you actually, once you run into a previous high and you got RSI above 70, which we have right now, you're going to have some resistance. How big a resistance? I don't know. I think you can possibly pull back, worst case scenario, to 200. So that's about a 10% decline. Reason why I think this high right here could hold the support. But I think at minimum, this market burst has been gone straight up since last August. So it needs a rest. It needs some sort of a energy to build for the next move. So this is the time it's probably going to happen. And I got quite a bit of information saying this is probably more of a multi-month consolidation. Not saying all stocks are going to consolidate. I think the big ones, all the big ones, AEMs, Newmont Minings, all those big ones will consolidate, but the small ones will probably come to the forefront now. So not a big bear. This is like, I think it's just a timeout and an uptrend. Here's a short-term indicator. This is GDX, just a daily, and all this is the 10-day average of the up-down volume for GDX. It's just a 10-day average, so it's a 2-week average. And it kind of works like an oscillator. This is a pretty good indicator of short-term trades. And a chart goes back to April of last year, so about a year and a half goes back thereabouts. And I marked all the times when this ratio got above 50, or thereabouts 50. I think we had 52 for the high. But that's all this chart is. So, I mean, it does a pretty good job just picking out short-term highs. This kind of flipped to sideways
sure
market.
Does, yeah.
That one pretty much nailed all the short-term highs here. But anyhow, this went down for about 2 weeks. This went down looks like about a month and a half. This maybe a month or less, whatever. So anyhow, we just turned down today. When I put this chart up, we're off 2.39%. First support's 54. If that doesn't hold, we'll probably go down to the next previous low. This kind of make this high here, previous high. At previous times, I thought we might get down to 40. And that still may be in the cards. But we're looking for a multi-week, if not a multi-consolidation. Not a top of any consequence, but market needs a rest to build energy for the next move up. And if you look at all these second-tier stocks, all the monthly charts are just starting to pull up. And once the monthly charts pull up, it usually doesn't turn around and go right back down. If a momentum turns up right off the bottom, it's usually a multi-month, if not a multi-year rally. So I still think we have plenty of time to the upside. It's just the ones not to be in is the majors. So we got a short term, we got an intermediate term, we got actually on a monthly chart, all giving short-term signs or giving bearish signs here. So I'm looking for a decent pullback. And if you remember, Tom and I were kind of bullish in 2024. We're talking how the market's going to run up. Well, it did exactly pretty much what we talked about. And now we're going to have a rest period of probably of a multi-month. But I think the worst case scenario is that 39 thing I had back over a couple of months ago. But we are going to have a consolidation, so be prepared for it. So
they're great charts, man, and I love watching with the ratios. And boy, that one that you have up there right now, that GDX with those spikes when you get it over to 50. Yeah, that's a pretty decisive chart, man. I mean, you might not crash, but you're definitely not going higher anytime it gets to that level. I mean, best case scenario, you have a couple consolidations slightly to the red there, and remarkable that you got the XAU back to right where you were, right? Sometimes, I always, not joke, but say, sometimes it's just not that complicated, folks, right? Like, as in, if you're going to run into an area, we're coming into where we were in 2011 from $100 2 years ago, and we're at 225. And quite a market acceleration for sure.
So this whole thing could be a right shoulder here, that right shoulder there, or left shoulder there, and the right shoulder there. So that's what I'm thinking could develop. We'll cover that as time goes forward.
Tim, I appreciate it, man. Great info as always, and we look forward to talking to you on Thursday.
All right, talk to you then. Thanks
All right,
a lot.
have a good one.